Hello viewers, welcome to 360 Investor channel. Today, I'm going to do a short video and slightly different content on the markets. Let's check in how the markets are doing. So within our 360 framework, today's focus is on markets. And as I said, today's going to be an abridged version of the agenda that I usually do. And before we begin, a quick word about the disclaimer. The channel is not providing financial advice. Please pause, read, and continue. Thank you. Okay, so without much further ado, let's begin. And so let's take a bird's eye view of the US markets first. These are mini charts of the different indexes making up the US markets. So we're looking at kind of a 6-month window, and they're ordered in terms of relative strength, top to bottom. So the NASDAQ here is the one that's showing the most promising strength over the past several months, and then this S&P, etc. So just left to right in there, the bottom row. So we can see that the NASDAQ's done, the index has done much of the heavy lifting since the low was established earlier, and then the S&P has been following suit, a little bit weaker than the NASDAQ, but the broader Wilshire hasn't followed. So this is the NASDAQ and the Wilshire are at divergence. Utilities have been rolling over, as does the industrials, and then even the broader NYSE index, we can see this is still continue in a downward pattern. So that's telling us that the broader market is not as strong as looking at the NASDAQ would allow us to believe. And the Value Line Index, which is run by Value Line. Then in the mid caps, we can see the mid caps have not participated in this. The small caps have not participated, and the Dow transports are also rolling over. And so with that, we can see transports are down, as is the Dow. So this kind of lends us to think that the run in the NASDAQ is subject to a few stocks that are driving this index, right? So because based on the other indexes, it doesn't look like the rally is broad, and so that tells us that potentially this thing could fizzle out. And if we do a deeper dive into the sectors, again, similar setup in terms of strength. So as we can see, technology has been driving of late, and that's why we see the NASDAQ in the #1 position. It's a growth sector, home services growth sector, and then we get to staples. Staples have been selling off, and so this one's lost some sheen. And then, but all these three sectors are still outperforming the S&P, and then underperforming the S&P, we got healthcare, which you can see has been rolling over, utilities, discretionary, not doing as well, materials, industrials haven't gone anywhere. They're just kind of gyrating, digesting sideways. Energies have been rolling over since the price walls come down. Real estate, no strength there. And financials, as we will know with what's been happening with the regional banks, obviously we would expect that to take bottom spot as it has. So that's, again, this picture is, once you drill down into below the indexes, in this case, looking at the sectors, the main sectors of the S&P, we can see that it's really only the technology areas, XLK and XLC, that are showing strength. The rest are just, nothing to write home about. So if we then look at the mega caps, so these are the ones that typically drive the indexes. So let's take a look at the top 11 and 12. And so NVIDIA, and this is partly obviously news driven because of all of that, the chat GPT AI buzz that's going on right now. Meta's bounced since they've announced their cost cutting and pulling away from investing all of their money into the metaverse. Google, you can see, has just been chopping back and forth. Microsoft's showing a little bit of strength, but again, mostly chop. Apple is holding, and this is kind of the value trade, acting like a defensive trade right now. But everybody's rotating into Apple as a safe haven. Walmart, nothing's right on there. Tesla, since it fell, hasn't really been able to recover a lot. It's trying. We'll see what it does. Research putting in line with the financials a little bit. United Healthcare has been pulling back in, as we saw in the medical sector, and again, medical sector. So medicals are not moving up as on the clip that they were before. And finally, energy side to roll over. So we've got medical not doing well, energy's not doing well, financial certainly not doing well, retail not doing well. We've got some of the tech companies have done well, but it's not it's hidden. So the bottom line is that we can see the heavy lifting and who's doing the heavy lifting in the index. If they get run into trouble, then that doesn't bode well for the overall index. And then if we look at the NASDAQ itself, this is the composite. And so if we just look at this daily chart, if we look at the recent action, so there's a system from Investors Business Daily, which I've referenced in a prior video, on how they make their calls on market uptrend, market correction, etc. So based on their systems, so this bar here on this day would have been a rally day, and then once that's been established, then they start counting, looking for a follow through day. Usually comes day 4 through day 7 of the sweet spots, and then it can go out to days 11 and 17. One or two rare occasions has gone out to the low 20s. But so if that was day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we're sitting at day 10, and we're still within the kind of the sweet spot zone if we get a follow through day. So we need a nice big price surge on heavier volume, which is basically volume higher than the Friday. So IBD is still looking to make the call. They currently have the market in correction, but this could turn on a dime any single day if we get a strong day, and it's backed up by good volume. Now, given Friday's volume was pretty anemic, so this makes for a soft comparison on Monday. So if Monday comes in with a reasonable price performance, then it should beat the other volume here. So probability is good that Monday could deliver a follow through day. If it doesn't, then we continue to count. So that's the NASDAQ. And so that's kind of where we are over in the market. So it looks like the strength is kind of pretty narrow, but we, we'll always be open to the data coming in and we really change mind, change your hypothesis. Okay, so that's it for this particular video. We wanted to kind of keep it fairly short and deliver the message quickly to you so you can make sense of it for the coming week. If you haven't subscribed, please do so. If you like this video, give it a thumbs up and share with your family and friends. If you want to leave a comment, please do so. That wraps it up. Thanks for watching. Thanks for listening. I will see you on the next video. Goodbye.